Google says that some traders aim to have consistent 1 to 3% daily gains on day trading. While it doesn't sound much, but if we go to the compound interest calculator and can see what we can make in 1 year, we will be excited. So let's say we have $1,000 starting with, or just $100, really low. So we have 1% of daily return, and compound frequency is daily. And we want to see what we will make if we'll do it consistently for 1 month. We don't have regular contribution, we just run our initial investment to calculate. So in 1 month, we can have 35% return. I don't think it is realistic. So because if you consider it in 1 year term, you'll probably be a millionaire from $100. That's a huge return. And I don't think someone can consistently keep 1% daily return. So let's consider average monthly. Let's consider 1% monthly return. So it means that yearly we make approximately the same as we make in S&P. That doesn't sound really appealing because we need to spend lots of our effort instead of just passively get money. Well, S&P on average makes 6%, but for the last couple of years, there have been lots of years when it make more than 20. So it doesn't sound really appealing. But if we will be able to make 2% of monthly return on daily trading, 30% sounds more appealing. And if we will be able to make 5% monthly consistently, which I still think is realistic, it's 82% yearly, so we can almost double our investment. So in this video, I'm going to figure out if we can crack the code and find out the way to make 100% consistent, 100% yearly return by trading crypto. And I'm not gonna teach you technical analysis, indicators, trading techniques, but instead I will be coding today with you the trading crypto bot that will let us be relaxed and the bot make money for us. So it's almost passive. The good thing about this approach that we will not need to wait 1 year or whatever to see if it works, but we can build the bot and test it on the previous data and see how realistic it is. Alright, so let's dive into it. So after doing a bit of research on how to create automated crypto trading, I found this open source platform that's called Freqtrade bot. I'll just dig into the source code, and it sounds legit platform. So it's completely open source, has lots of activity on GitHub, lots of people using it. It could be integrated with Telegram for notifications. So you can just use their web dashboard that provides some basic information about your trading. It integrates with a whole bunch of different exchanges. I think that this list is not all the exchanges that it supports, much more. What the limitation I found that it probably doesn't support decentralized exchanges, so we'll be trading on the centralized exchanges. I found that that's pretty straightforward because why using crypto bots dangerous? First of all, if you're using some commercial crypto trading bots that offer you to just buy their software, they usually charge, you either pay a fee or they charge you, well, I think most of them charge you a commission on profit. So if you make profit from trade, your exchange will take away a chunk of your profit, and also the trading system will take away the chunk of the profit on top. So just when you'll do it consistently, it will not make sense because you'll be spending lots on this profit sharing. Another thing that might be dangerous about crypto trading bots that they might be hacked or abusive. Most of them promise we are not authorizing to you, we don't have access to your phones, anything like that. We're just getting the API key and doing trading crypto from your account. So we can't do much more than you told us to do. But I have heard lots of stories when such crypto trading platforms were buying some NFT assets that were all the way up for value. So for instance, how they were scamming people, so they were offering them crypto trading bot. People were signing up, started trading, and they were creating the fake NFT assets and selling them for a couple $100 each person, while the value of the asset was neglectable. And that's how they were faking. So I'm not saying that all of the commercial crypto bots are bad, but I say that I still In this decentralized world of crypto, we have the biggest benefits. We have freedom, no one traces. We can do what I want to do. But on the other side, we have the problem of security. There are a lot of scammers, a lot of different kind of scamming attempts like that. And me being the software engineering geek, I like to dive deep into the algorithms and have a full control over how things work. So that's why I prefer to use solutions, something that I can build myself and test properly. So I've already set up some environment for Freqtrade. So basically, this is my coding directory. It has some files that were generated by the Freqtrade bot. So follow the official instructions on their website. I was running in the Docker. So yes, they offer the quick guide to the Docker. However, I slightly modified the official Docker Compose file. I also included the Freak UI. So this is the web dashboard where we can just see how trades work. And let me open right now, by the way. Yes, this is the trade dashboard. It just opened. It has no trades so far. So no open trades. The current strategy that is running, I'm just running it as a test example. I'm using the sandbox network, so I'm not trading with real money. I'm trading with fake assets just to validate the strategy. This dashboard is not super comprehensive. I don't say I have much information from it. I'm just using it to see if there are any open trades and how frequently the platform is trading. But yeah, but other than charts that I can particularly find in any crypto trading exchange and the logs, other than that, I can't find anything really comprehensive, but it's just handy to have this kind of user interface. So yes, if I open this, we can see that I have this control running for 7 days so far since I started playing with it. And there is currently one trading bot and there is currently one strategy running. So the Freqtrade, they have something called strategies. And strategies is basically your trading strategies. So this is some simple strategy that was provided probably out of the box with the platform. It's super straightforward. I don't think there is something meaningful in the strategy. I even didn't explore the strategy. And when you go to their GitHub, they have a couple of strategy samples, but actually have separate repositories. So I think they must have something here. So they have a couple of strategies, and I don't know, they have the time frame in which they calculate. They all seem to be profitable, and if you take a look on these sounds, so they're calculating on 1 month, just 1 month, 30 days, and 3.21% is really good return. So I immediately just dived into that strategy, and it sounds, so I started digging the code, and I basically copy it over to my code base. So I start testing it. Yeah, so this strategy is really a strict one. It just specifies lots of conditions of when we enter and exit. And from what I found, this is the spot trading strategy. So it means that it only works on bullish markets. On bearish markets, it will not work because on the bearish markets, we need to be able to go short and thus need to use some futures. So the strategy is really strict. So the strategy doesn't trade really frequently, but they claimed it to have a decent return. So what it basically does, it just uses couple of, so they populate, so how the strategy is built, basically you create a Python class that implements some interface, and this class must have couple of methods. So I think this one is just optional informative pairs. The populate indicators is the one that actually suggests us which data should we get from exchange and which indicator should we calculate based on the data. And then populate entry trade. This one calculates conditions when we enter. So when we basically make a purchase, in case of entering long, in case of entering short, we're making the also short enter in futures, but right now it's about longs. Then populate exit trends when we are exiting. However, this strategy will also have something called minimum ROI. So it means if we populate the entry trend and all of these indicators will succeed, and we can find that our strategy, that our order has grown up in 5%, we making a sale immediately. We will not wait for populate exit trend. So basically this map represents the minutes on the left side and the percents on the right side. So it means, so if after 20 minutes of open trade, we see 4%, we exit. Then 30 minutes 3%, 60 minutes 1%. So this is how it works. So the strategy basically tells us, please do not hold open trades for long, just sell, make a profit as fast as you can. Stop loss. So when you entering the trade, you might say stop loss. If you bought for, let's say, for $100 and then the price drops below 90, it means minus 10%, you exit because you don't want to risk dropping it more. You expect it to. Of course, you're losing, but at least you're not losing more than 10%. And by the way, 10% is really high stop loss. So in the strategy I was considering, I was doing the 3% stop loss, but 10% sounds really high. So they're considering the volatile environments. They trade on 5 minutes intervals. So it might be that they bought on 100, then it dropped to 95, then it grew up to 105 and they sell. Yeah, the time frame, trailing stop, they disable it. So what basically trailing stop is, it means when the price grows, it, instead of exiting, it just increases stop loss. So for instance, our stop loss was exit on $90. We bought on 100. Stop loss was exit on 90, and now it grew up to 105. So we now say our stop loss would be 104. So if it drops before 104, we're exiting and still making profit. Let's say it continue grow up. So a trailing stop lets us to not just quickly exit on the first profit, right? Like here, for instance, we see 5% we exit, but it lets us to basically go up and up and up if the price continues growing, even if it's higher than our exit trend or our ROI. This is disabled with this strategy because considering that they will just better get minimum ROI, then we'll be doing this one. Yes, so they populate indicators on your new candle. They do not recalculate existing candles, so that's just optimization using exit signal. Yeah, so they only exiting if profit or stop loss. I don't know what does that mean, I forgot. It just defines the order type. So they're doing the limit market. That totally makes sense. So simple strategy. They're using some interesting indicators. I have never actually used them. So usually when I was learning trading, I was considering some standard indicators like EMA 200, RSI, something like that. But they're using this SOWK, then Fisher RSI, BB lower band. I've explored those indicators that look pretty interesting. Yes, and that's why probably they got such a good return on the strategy. So I have already run the test. So let me open data backtest. So this is my README. So let's log in into our Docker container because everything runs in the container. So we have this Freqtrade container where everything is running. So I'll run docker exec bash. So right now we are on the Docker container and in the same directory. And this is the command that we're using to download the data. And also there is a config file where you store all the configuration about trading, about your credentials. I'm working with the sandbox environments right now, so I'm not trading with real money. I'm just playing, right? So I have already downloaded data, so I can just list it. You can see that I have downloaded spot data for BNB BTC ETH for 5 minutes. They don't say which time frame the data here, but I was basically downloading the last 180 days. So it is last 6 months of the data. And for the last 6 months, I would say market was mixed. So it was a bit of a bearish and bullish. It was pretty volatile. So we don't have any specific trend that we can say, oh, market was really good, consistently bearish, so let's test. And that's why testing this strategy might be tricky, but this actually shows you how your bot can behave over time. So we can just go ahead and make the backtesting. So I'll run the Freqtrade backtesting. The only thing I want to check if right now my config file is adjusted to trade on futures, and I don't want to trade on futures, so I'll config backtest spot. I want to test on spot. I'll copy it over to spot. Trading mode spot, margin mode, I don't need this for futures, so at least only test this one. And for the spot we don't need these specificators, they only work for futures. I don't know, haven't explored deeply the reason why future trading have these duplicated USDTs, but anyways, yes. And here are some order time enforced. I think all this pretty much straightforward. Yes. So we can run the backtest and see how the strategy works. So the idea is with this approach that we have strategy. Someone promised you that it returned him for the 3% for 1 month. And we want to test how it will behave in this time frame. So yes, well, I'll use, oh, sorry, not this one. I'll use the data config backtest spot strategy then. So the strategy should be the name of your class. So if you open the strategy, this is the name of the class, strategy 002. So we'll use this one and the pairs. Let's take all of them. Let's run the backtest. We'll see if I'm not missed something. So we've tested it. Let me see if they specify the periods. Yeah. So they testing from this the 10th of February 2025 to 8th to 9th of August 2025 on spot, and we can see that this strategy was unprofitable, so we basically lose some money, and we won 52 orders but lost 3 of them, so we have pretty good win percent, but still the losses were so severe that the strategy profitable. I'm thinking maybe this is because they have really big loss. So let's decrease loss to 0.5 to 5% and see how it will be different. Okay, now we have strategy profitable, and that's great. So our is not, it was just 0.5%. Yes, again the same thing. So we have pretty much the same numbers, but we got losers, and we make bucks, but I'm not sure what was our, so our was 1,000 and we made 1,000 in 6 months, which is really bad result, I would say, because if you'll use index funds you'll make more. So let's like even more conservative. Let's drop stop loss to 3%. Okay, now in lower profit and even more losses, but the stop loss actually working much better on 5%. So I think 5% stop loss might be really relevant. And in case we make 0.5%, so I think the 5% stop loss was really the most profitable. Let's check it again. Yes, we make more. Let's try stop loss. Let's just gradually test it. By the way, to make the test like that, Freqtrade has something called hyperparameters. So we can see here that this one is less profitable. So 5% was our best stop loss over this period, but we tested over this period, and this period was highly volatile. So I would say the period from the February to August this year was really unpredictable, because we get the first half of the year until July. It was a huge dip. It was bullish market. Everything has dropped. The S&P, everything. So it was really bear period, small recession, I would say. And then from July, Bitcoin dropped all-time high. So the period was really unpredictable, and we still managed to keep. I can't say that we make something, but we just kept our money, right? So again, but it's just bearish market. So how we can prove it? We can, let's actually chart. Let's go to trading view. So this is chart of BTC for USDT on Binance. Let me, it has some indicators turned on. I think these are the EMA indicators. So let me check. This is EMA 20, 100, 200. So the indicators show us the trend, and if we right now I think it's 1 minute interval is too little, so let's make 1 interval. Yes, so we can see let's start a bit 2025. So what we can see on our, if we consider EMA 200, we can say that we can say that this year, it was bearish. It was entirely bearish year. Sorry, it was bullish year, right? It was the bullish year for entire year, because this blue is EMA 200. So it shows us exponential whenever average move, exponential mean average, I think. So it's moved this volatile chart in 200 candlesticks, and we can see that there was period from, let's say, March to May, 2 months of just, I would say, straight lines. So during this period, market was really unpredictable for EMA. But if they consider the shorter EMA, so they smooth the chart based on shorter lines, and this way, yeah, let me just, so we can see February until August. Yeah, so yeah, so this is February until August data. We can see that, let me be colors. Oops, sorry, something happened and I don't know what. Yeah, so see the shorter 20, let's aqua would be 100, orange 50. So aqua, orange, we can see that aqua on 100 started dropping. And yeah, so if we consider these shorter periods, we can see that we begin the bearish market until the May, and in the May it's starting to become bullish. So yeah, why into account different steps, because our trading has a time frame 5 minutes, so it's really short interval, and it means that it will be highly sensitive to short-term volatility. That's why we need to consider shorter periods like 20, 50. I would say even we can even ignore 100. And if we look on 20 and 50, so if we scored, and oh, this is read only, we can, because we need to purchase whatever. So red and orange, just take a look on red and orange line. We have red line and orange. We can see that the February red and orange line is clearly bearish, and it becomes, the orange crosses back blue one, it's become bullish from the May. So what we do, test this strategy on bearish market only. So we test it only on the market. Okay, so let's go and ask ChatGPT or someone else, so I will not spend my time digging docs, how to specify the back period. Okay, we can do time range. I'm not sure if the GDC is correct, because sometimes it's just to lie. So let's do 2025 05 01 to 2025 08 09. Right, so we had until 09, I think. Yes, great. So now let's do the back test on only bearish market. Sorry, bullish. I'm confusing these two. And we can see that, yes, that actually we had no losses, because it's purely bullish strategy. But the profit is still low. We may think so. Let's increase loss back to 10%, because I think this is how the strategy designed. Okay, nothing. It was nothing. So yeah, well, actually, strategy performs better. It has, so it's 0.65, but it is on just whatever, May, June, July. So on 3 months, it generated 65, and before we were generating 50. Yeah, it's before we were ranking 0.5% on 6 months. So what I can say that, yeah, this strategy, yeah, is a strategy, and it also does not provide us with the insane returns. We wanted to have at least a 2 to 3% monthly, so we can't here. But maybe if them is insanely like this. So 2021, if we get the data 2021 to, so if we get, let's say, yeah, from beginning it was extremely volatile. Yeah, actually there was a bit of a dip here. Yeah, so at beginning 21 to whatever, before it dipped, let's use this one, the April. So those 4 months, I think it has better dip. So because here we can see, so January 25 it has a dip here, boom, and May it become growing. So actually it become from the, yeah, from April, beginning of May, and still this period we didn't generate match. So if it's 24, when we have first ATH of BTC, yeah, maybe this one. Yeah, we can test it like that and find, yeah, conditions under which these strategy perform the best, and then based on that we can probably some EMAs. Let me see, they're not using EMA at all, so I would add another entry trend here. So how I'll do it is basically I'll borrow it from my previous one. So they're doing popular indicators. Yeah, so just another condition here to make sure that EMA 10 points, right? So we make sure that these that this run, or M20 basically, this red one points upwards, then only the end of the trade. I think this condition will significantly smooth it. Yeah, let's wait and see. So if we go to couple indicators and say data frame MA20 equals so TMA, let me check, because I've been doing it in this strategy, but I forgot how it was. Yeah, data frame. Maybe this is a progress, because I forgot the syntax. I think this one should use. Yeah. Okay, yeah, with the close price and time frame, time period. No, like this. So we have EMA20, and then we want to make sure that, yes, that EMA20 points upwards. Let me ask GPT to do this. Let's ask ChatGPT to do this. So to check, point upwards, yeah. So they want to make shift on one. Would shift on be, yeah. So let's, if, yeah, we can play with it. So yeah, the idea is that if we have let me show you on the chart. So if over here we can see this red line, we have multiple candlesticks. Let me just zoom it in. Yeah, this red line, and we ask him, okay, get the web this red line on this candlestick and this, if this value is larger than this, it means that it is bullish and to enter. Otherwise, in this case, it's lower than this, so we don't enter. And I'm asking, okay, it is enough to make just one candlestick difference, or should we measure, for instance, between these and these when we have a better picture? Well, technically, if I'm entering the 5-minute interval, so the one candlestick might be good. We can play it and see what will be. Yeah, I'll up to just, yeah, here you go. So it applied the shift. Yes, and Freqtrade has called hyper optimization. So basically, this code, if you see it here, it's really complicated. And what you're doing, you're defining the different parameters, for instance, period, as a threshold. So we're using EMA period here, and basically what it does, it lets us to backtest the strategy based on the different variation of these parameters and see which parameters variation performs the best. And I was doing it for this strategy, but I find it overkill. First of all, because this code becomes really hard to understand, hard to read, and also I don't think manipulating such changes, steps of EMI, whatever, will make significant difference. What makes difference it is something obvious. For instance, for the strategy, we can see that if we tweak in the exit position, it makes a difference. So we can play with that as well. By the way, what will happen if we put like 15% here? Let's give it a try. I'm finding strategies manually of this more interesting. Yeah, so look what they will sell us. Yeah, so pretty much the same, does not change. So I think 10% for the bearish market, really good. Okay, now let's go to the indicator that we have here. So we have the data we made up. We want to make sure that it is up. So we adding first condition will be, yeah, if it is up, we continue. Otherwise, if it is bearish, goes down, we do not continue. So this is a strategy. Yeah, let's run on our most profitable period and let's see how well it works. I don't think it will influence somehow. Whoa, we have lots of stuff here. I think it didn't do anything. It didn't make any trend because I suppose there is something wrong with the. Let's ask. So they calculated it is up. Because I used it in the right way, but GPT our back told that we didn't do any order, and that's, well, yes, I know what's the problem. The problem that, yeah, this EA, this contradicts with those RSIs. So basically, the idea of this strategy is that we should, and when we have a dip, so when we have, for instance, small dip, right now we see just had a bit of a dip, now we should enter and then it rolls to be sell. So this strategy works like this. It means that this EMA, the short one, will always be up. It will be down on the trading, so it doesn't make any sense. So what can help us is actually met some longer EMA, like 50, and make sure it is up. Because, for instance, here you can see the 50, it goes up all the way down. If this tiny bit of the red one goes shortly down, this goes up. So yeah, let's EMA 50 instead of 2020 is too short, and yeah, we basically want it to go down because this is our good indicator that we are on the right place. Yeah, let's try, and let's 50s up and see how it will work. Okay, the same. Basically, no trades made. That's okay. Now let's test. So let's do 100 because, oh, sorry guys, I forgot to update this one. Yeah, silly me. I forgot the most important one. Updated the labels, but no, still no. Yeah, okay, no. Make 200. 200 would always be up. And let's just EMA because yeah, we'll play with numbers. So 200 should influence it in EMA because 200 should always be up. Yes, now we can see really low profit here, so it cuts lots of our profit. Yeah, so this optimization doesn't work here really well. It's only efficiency of the yeah. So the problem I was doing it, I want to check if we have bearish or bullish market. Because on the bullish markets we're making lots of losses on this strategy, on the bearish, sorry, and on the bullish we money, and I haven't found a way to yet identify bearish bullish. I think we can do this on larger EMA. So for instance, this is the 5-minute interval. So if we take like, we need to load more data. Let me check, there was a code I was loading, startup candle count. Yeah, so we load more data. Let's load like 500 candles. Let's calculate EMI for 500. So what I want actually to do is to show the same result, the highest result as we had before. And this EMA 500 will be just our sort of protection, the entering market. I want to say somehow this strategy, please enter bullish market. Maybe there are some another, so some more holistic, but I'll do 1,000 because it still doesn't generate good profit here. So I'll do this 1,000. Not sure if it will perform that large, but let's take a look. No, it's still efficiency of the strategy. So with this 1,000, so we basically can't find the best for bullish market. So I think yeah, we can optimize it, but yeah, but the is that here that is for bullish market only. So if you, it's probably in the way, so you know, okay, a bullish market, let's take the next month. And then if you wake up in the morning and you read the news, oh, Bitcoin started dipping, you stop the strategy. So it requires manual intervention. It's sort of like a gig. But what I'm considering to do the strategy that will work completely autonomous, continuously on the bearish and bullish markets, and it will work in any condition. So we have this code that AI generated me, and it's really complicated because it was designed for hyper optimization, and it basically I didn't results because hyper optimization didn't show any good results. So I call it so this is universal hyper, advanced futures hyper. So this is hyper strategy. It works futures. Now I want to do, I will get back and find out the simple quarterly strategy without hyper optimization. And then, yeah, I'll just run the strategy and think about how we can optimize it. Before we move forward to actually diving into the new strategy, there is another thought that came to my mind recently. And basically, I was thinking, if we can go back to the stop loss, we need to open this one. Yes, please. Let's leave everything as it is. So I was playing with limiting this by EMI. The idea was that I wanted to see if we can potentially use the strategy holistically. So basically, if I leave it passively, I don't want the strategy to work on the bearish market. So I only want it to work on bullish market. And the idea of the strategy itself that it works on the bullish market, but it expects the dips on the bullish market and uses these dips to make profit. So if we're using EMA, even to long or short for 5-minute interval, this EMA designed to show us the dips but it doesn't show us the overall tendency of the market. So this is why it conflicts with the profit settings on the strategy. And we can see if running again, let me see. Yeah, so we're running it in the bullish market for 3 trade pairs. I just want to backtest again and see the highest profitable we got so far. So I think it wasn't this one. So it made 7. Let me see if we removed EMA from here. No, we have EMA, that's right. So let me just delete EMA completely. So we don't have EMA at all here. We don't need EMA here. Popular entry trend. We don't need this shit. And we don't need EMA neither. Let's just remove it completely. Stop loss. So this will have EMA. Let me see. Unpopular indicators. I don't need this one. So I remove EMA completely. I leave 10% the stop loss. And let's run again profitable. So this one is really good. We have 30 wins and we made $6 with total profit of 0.65%. And previously admitted this total profit is not satisfying. But what I was thinking about that total profit might be much better if we allow higher number of trades and if we use more trading pairs. So right now we're using the coin and Binance coin, and I'm not sure what's our, let me check spot here. So what's the maximum number of stake amount, max open trade? So I'm thinking if we can do it wisely and increase, let's say 10, let's do this one and see. Same, right? Because we have 3 trading pairs, so basically we don't benefit from increasing. But what if we had 10 trading pairs and let's see how it performs. So what I'm gonna do is I'm going to add more trading pairs and 10 open trades. And of course, this is not something we're doing really wisely right now, because ideally we should just make some risk analysis on our entire budget, on our stake amount, max open trades, to calculate how much risk can we tolerate and find the sweet spot that brings out the most profit, and yet risk versus profit has better ratios. So it's much higher probability for us to make money than lose money. But for the sake of the experiment, I want to play around with it. And what I'm gonna do, I want to download the data for more pairs for the same time period. And yes, let me find out which pairs can we use. I just asked ChatGPT about it. All right, so it listed me let me ask him to fill him. I'll ask the GPT to fill him into this human. So here you go. Again, this is not the best approach because I have not analyzed any of these. I know most of them. They are in the market for probably more than 5 years so far. So that's fine. But again, for the sake of experiment, I don't care much. I just want to give it a shot. And when I'll be setting up the real production ready strategy, I will consider making better research into each coin. Right now, we're downloading the data from Binance, and we'll have 10 of them and try to run the strategy on 10 of them, and we'll see if we can benefit, because really we are not limited here in number of coins we can trade. And if we can find tendency that most coins correlate with the Bitcoin, well, there are some exceptions, but again, these exceptions are exceptions, they are not trends. So I think if we increase the number of pairs we trade, we will utilize more of a budget, because if you have a grand and we're only making $50 stake per trade, and we can have three trades simultaneously. So simultaneously we can have $150 utilized. And well, I don't know, I haven't done any statistical calculation yet to say if it's secure enough from the risk point of view, but I know if we have more, if we utilize 80% of our budget, even 100% of our budget, it's very unlikely that everything will lose on everything, right? It's likely that we will win on something, lose on something, and thus we can have more advantage. So let's do the back testing. Let me check if we're whitelisting them here. So I want to basically ask GPT, because I'm lazy enough to copy paste them. Yes, here you go. We have everything here, so we can just 5 to 14. Yes, amazing. And then when I'm going to be running backtest command, yes, I need to, let me remove this part. Yes, we have max open trades 10, that's good. So we can maximum utilize half of the budget, that's fair enough. Yes, and I'll copy the pairs just from the previous command here and I'll paste it after so we can have better readability. Let's do it now. I'm backtest with 10 pairs. what we have? Oh, now we have, wow, that's interesting because it have made 83 trades, total profit, average profit, that's fine. Total profit is even lower. We have losses. So this strategy doesn't necessarily benefit us. And that's interesting, right? Let's see our previous result. So this is our previous result. Profit was higher. We have fewer, this is average profit. So profit per trade was much higher. And I think because these three coins of Bitcoin, Ethereum, and BNB have better correlation. Yes, and you can clearly see, for instance, best pairs. So Ethereum has the best trade because Ethereum has the big bullish moment. Bitcoin has lower bullish moment. BNB has a bit of a bullish point. So if we see it here, we can see that we're losing money on Doge. We lost on Doge 10%. That was a lot. And we were losing on Link. So that's something that killed our profit because these coins are more volatile. So we can also play around with stop loss. Let's make it 5% and do it again. So it's even lower. So the strategy benefits of stop loss. I like this strategy. The only thing I'm not sure about is how to scale it. So currently we're limited to 0.67 total profit, and I'm thinking how we can increase it. So let's do the next thing. Let's get back. So let's have 3 pairs, and let's have stake amount. If we have 3, we can have 200. And let's just trade BTC, Ethereum, BNB as we did before. In that case, we will have higher profit. But again, this is very subjective because we only tested on one period. And yes, so now the profit is really good. We made in 3 months 2.6, which is not yet perfect. It's not something impressive, but it is better. So if we do 300, we'll have more. Yes. So 4% per 3 months. So it's 1.3% per month. So nothing fancy here. So we're not making big money here. We're not even matching the stock market. And furthermore, we're testing it on the short intervals. So it's highly risky because this strategy then doesn't work. It can show some good results in short term, but we have very little control of the strategy where it's aggressive, so it assumes the market should be really bullish, and every tiny bit of bearish signal just eating the profit. So for that reason, by the way, let's check. Worst trade was BNB. So BNB is the worst pair. So if you remove the BNB, and so we have 2 coins, we can have 500 each and do this one. I think we'll maximize our profit here, but now we have even better profit. We have 5%, almost 5%. But again, this is because we know the markets. We analyzing from the future, so we know the past. And if you do it for the future, you don't know the future. The problem is, and this strategy will kill. So this kind of profit is just really biased. And I would say 4.68% for 3 months is not a huge one. So I think this strategy is not scalable. It can prove some short-term results, but it's a simple strategy. It's open source one, so no one probably invests lots of effort in fine-tuning it. So that's why we can clearly say that the simple strategy is not something we expect, and it's not scalable. In my next video, we will fine-tune with you the universal strategy, and right now it's called adaptive future strategy. So the idea is, right now it's really complicated because we've used the hyper optimization conditions to test every possible parameter. I found it is an overhead, and it is much more convenient to do what we've done, to just test everything separately and compare results. Of course, it's longer, but at least you're staying in the context. And you know which parameters on which time frames the ranges benefit here. So to make this strategy work, we might consider having another property that will be short EMA on 1-day interval for the last, let's say, 20 days. Because I don't know how to implement it with that one. Maybe it will require something else. Because if we calculate EMA here, we calculate on the 5 minutes time frames, and it conflicts with the strategy. So ideally, we should have the 5-minute time frame for calculating these indicators, and we should have 1-day time frame to calculating the short EMA to just get a feeling of the market direction, bearish or bullish, and then had another condition that will save the strategy from taking bad stakes. And I think it will mitigate. We can consider fine-tuning it. Yes. And in the next video, we'll use this strategy. So basically, it enters crystal long and short, so it can benefit from both bearish and bullish markets. And I wanted to build it flexible enough to really run passively and make money on any market. Right now, this one is complicated. In the next video, I'll provide a simple version of this code that will be more straightforward. And we will start fine-tuning it, optimizing it with multiple conditions to make it sort of like the manual testing and see how we can benefit. Can we have the strategy that will generate us 3 to 5% stable monthly return in any market, bearish, bullish, whatever. So stay tuned, subscribe to my channel to not miss that bit. And there is final bonus. Right now, I want to figure out if we can have the short EMA on daily intervals condition here. So let me ask GPT. What I don't like is that it sort of measures just on the shift of one. So if we have only 1 point, we can have strongly bearish market, and then it might have some small recovery to bullish, and we catching up early here. We say that might be good. I think the one ship might be too risky, but we can play with it. So it is possible. That's great. So we have informative, we have multiple indicators. What is DP self-implemented pair for pair, DP current whitelist? Yes, I think we're good. Let's give that a try. So let's go to our test. So this one, I don't think we'll benefit much from this one, but let's give it a try. Let's run it on the simplest that we had before. All right, yes. So match mountain got unexpected keyword argument. This is something ChatGPT created, so ask him. I don't think he's following, or maybe I'm not following. Yes, he didn't look into terminal, he looked into the code. That's why you should be really cautious when using AI to make decision in your code, because sometimes it's not sometimes, in many cases it generates ridiculous bullshit, and that's how they claim it will replace developers. Oh my god, what are you doing, dude? This dude is on drugs. That's kind of annoying because it doesn't understand. You need to update every time the context. So AI is good for simple ad hoc queries. When it becomes something like more complicated, requires more context, more overall system understanding, AI loses context very quickly. So that's why I need to implement something like vector DBs or whatever. And again, when you do the AI agents, they are no all-purpose agents. They are the agents to doing specific job. So if you want the AI to contribute to your project meaningful code, you need to build a specific agent that will work on this project, knowing its objectives. So it means you need to create new agents for every project. So it means AI is not self-sustained system. It can replace human completely, right? It helps a lot, but these talks about AI replacing humans, I'm laughing on that. Look at this AI. I'm also hating it because it makes our code more complicated, and it definitely adds some complexity, but I think cool. Ha! Nothing. So the EMA 20 shows us nothing. Fair enough. On the bullish markets, they do not end as EMA 50, but I'm still doubting that it makes the decision based on daily. I'm pretty much sure it makes it based on 5 minutes. Let's do 30 and then take a look. Nothing. I think I don't understand all the code AI created. There are a couple of issues here, so I don't understand. Well, I think you should load them differently. So we should have somewhere the threshold. Load me the whatever 205 minutes candles last 205 minute candlesticks, and load me last 21 day candlesticks, and it is not doing it, and it say that it works based on the default values, but I don't trust them. I don't trust any of these because I don't know in detail what it's about. Oh no. So let me see what AI will tell, and then based on that we'll learn more if it's helpful or not. So standard startup candle count. The thing actually makes both perfect. They're telling that way, but I don't believe this is. I hate it. Anyways, let's give it a final try and see if we can do something that maybe if we strategy, which is that's the issue. We can't fetch all of the candles. Yep, dude, we can't. That's why we are limited. We are stuck here. I would expect having separate a style candle call informative. So it fetches separately. How much standard do we need? Let me check. 20, whatever. They have really little amount for the 5 minutes, 20, 50. And then the daily load separate 20. That's what I want, but it just doesn't seem it's possible with Freqtrade. It's possible, but it requires to better understand the system and find out some. That sucks. So basically, they offer us do it like this, and that sucks. This is not a holistic approach. I'll do it anyways, just to see if it just helps anything, but I believe that this is not the way we should do things. So that's it. I don't think we be able to do something relevant here today. I have a very big doubt that the strategy like this will benefit much from that gourd of EMA 200. Potentially it can, and the only way to know it just to test it. But again, it's just bullish strategy and we see its limits. It's very sensitive to bearish dips, so I think I will not spend more my time on digging into how to optimize this strategy. Instead, I will build my own from scratch. It will be universal one. So that's it for today. Please subscribe, hit the bell so you won't miss when I will release another video with universal strategy on futures that works both on bearish and bullish market. And in the next video, we will start with some base strategy and start gradually test it, backtest, optimize, improve to find out if it will be possible for us to have consistent 5% of monthly return passive on crypto trading, no matter which market we are in, bearish or bullish. So stay tuned. Thank you for watching, and I hope to see you in my next video. Cheers.